If you're ready, we'll go ahead. So first off, I just want to say thank you to the Chamber for allowing information to flow so freely as you always do, and for all the good folks listening in. I want to start out by saying that we're going to talk about the recovery with respect to the PPP program and kind of focus on this whole thing of the application and getting repaid. But I want you to know that things are not at its best shape. And one thing that we bought out by our leadership is that, keep in mind, this is a Treasury program and SBA has been used as a vehicle. This whole back end of it is new. It's going to be changing. And okay, so as a matter of fact, in this whole changing process, we don't want to get too much in the weeds because we know that even the application will change with some of the things happening in Congress. So with that being said, I want to first get into the overall program, and we'll go to I want to talk first about the economic injury disaster loan just for a minute, the numbers, just very quickly about what's happening. So we can go to the next slide, Amy, which shows the number of idle loans that have been approved. So next slide, please. I'm not taking charge of the computer today. So this slide shows that from the economic injury disaster loans, the United States overall, we've only approved 259,000 of those loans. Let's go back again. And of those loans, 24 billion has been funded, and for Texas, 20,000 applications, 20,253, and $1.9 billion. So that's for the economic injury. Let's go to the PPP. The next slide shows you the PPP numbers. And on the next slide, it's in yellow. Okay, there it is. On that next slide, so here we are. Nationwide, there were 4.3 million loans. And of those 4.3 million, we're talking about $513 billion. Now, this number is from Sunday. We know that that number is much higher now, but I can assure you there's about $90 billion left in the program to be funded. So if you know people out there, if someone's listening who has not been funded, please go to your bank. Please go to a banker, if your bank won't do it, and seek assistance if they will, because it starts with your lender. In Texas, we've had 346,000 loans approved for $40.5 billion. We are number 2 in the nation in states who've been funded. We run a close neck-to-neck race with Florida. California is number 1. But we know Texas is truly number 1 in our hearts. So on the next slide that you'll see, let's talk about the PPP program. I just want to go over some of the things that you already know, and just very quickly, that it's available for businesses that were in operation on February 15th of 2020. It's still a 2-year loan if it turns out to be a loan with a 6-month deferral. Still, in general, 75% of the proceeds must be used for payroll costs in order to get the forgiveness. And if it's not forgiven, a part of it isn't forgiven, the interest rate is 1%. And one question that comes up a lot still is that, can I get another? I got one PPP loan. May I get another PPP loan? And the answer is you can only receive one PPP loan. Now, many people apply to numerous banks, and we have situations where because one bank has it in the system, this person can't get the loan. So one bank has to cancel before the other one can make the loan. But we have had some exceptions, the unicorns, where people have gotten 2 loans, and that's being tracked down. So if that happens, you want to be upfront and say, hey, you know what? I got 2 loans. I want to get one of them back, because you don't want the government coming after you on that thing. And we know that we added that agricultural producers, farmers, and ranchers that have fewer than 500 employees are eligible for the loan. So then on the next slide, we're going to talk about interim final rules, just to hit a few points on the next slide. And the key thing you want to remember is that you as a borrower and a lender can rely on the laws and the rules and the guidance that was available at the relevant time of your application. These rules are changing all the time. We've had tons of interim final rules, which I don't understand. When you use the word final, I think it's done. But we keep coming out with new interim final rules. So the interim final rule that was out when you applied or when you processed the loan is the rule that will be applicable. Now, what is true is that all loans in excess of $2 million are subject to an audit. Well, actually, Treasury and it says that every loan will be audited over 2 million. Well, good luck. I mean, I don't know if we're going to do that because SBA, we only have 2,100 employees nationwide, with the exception of the disaster program. IRS has a whole bunch more, but we'll see. But that's based on the frequently asked questions, FAQs 31 and 39. And if you want to get information on the interim final rules, I have that website. It's at the Treasury website, home.treasury.gov. And then I have the rest of it if you want to go directly to the interim rules that's listed right there on that website. Now, let's go to the next slide that talks about the application briefly, because we're going to have a lot of questions. But I wanted to hit the next piece because there are two big areas that are problematic, I think. If you can hit the next slide. And if you're looking at the screen, the last screen has pictures of people who are very confused. And this thing has been very confusing. So if you're just listening by phone, I have on the slide a bunch of people who just basically are saying, what the heck is going on? And that's the way we feel inside SBA. As a matter of fact, when this application form came out, 3508, it raised more issues and questions than before. And I have an accounting and legal background, and I'm going to tell you, it's a bit challenging. I started my career with the IRS, which is a part of Treasury. And I smartly went to the private sector and then came back, not to the IRS, but to the SBA. Smart move. So it is confusing for everybody. And so just keep in mind that right now from bipartisan and even White House support, there are moves to change things such as the length of time, the 8 weeks, move that maybe to 14 or 16 weeks, maybe measuring point, to make this form a little easier. So we can go through this, but things will be changing, I guarantee you. So I just want to hit a few things about on the form. On the next page, one thing that comes out, some of the questions have been big, and go to the next slide if you will, please. It talks about the covered period. Okay, so it is a 56-week period right now on that former slide. It says the covered period is 56 weeks, which is still the same thing. And that period starts on the date of the loan disbursement. So for example, if a PPP loan was issued on April 20th, then the first day of the covered period is going to be April 20th. And then the last day is going to be 56 days later, which is June 14th. So you're counting the 20th and going forward. Now, people have asked the question, well, that's not good for me because my payroll is based on a biweekly process or a monthly process. So you can use the alternative payroll covered period, which begins on the first day of the pay period following the PPP loan disbursement date. So for an example, if you receive a PPP loan on April 20th, the first day and your first day of the pay period isn't until April 26th. Then the first day of your alternative payroll covered period is going to be April 26th. Then you count 56 days forward, so it'll end on June 20th. Now again, this may all change. It probably will change. So stay tuned. On the next slide, just 2 more points, and then this will be quick. I'm not going to bore you or kill you by PowerPoint or keep talking to you. But another thing that's really important is that, and it's a question from the frequently asked questions number 40, and it goes to some of your questions already. The question is, will a borrower's PPP loan forgiveness amount be reduced if the borrower laid off an employee, offered to rehire the same employee, but the employee declined the offer? And the answer to that is no. This is the exception. You as the borrower or the small business person has to make a good faith written, I'm going to say that word, good faith written offer to rehire the person, to bring them back to work. And if the employee rejects the offer, you document it, and that will save you on the number count that we'll talk about, on the number of employees and the FTE count. Now, the form itself says something differently. It gives you kind of a 3-parter. It says the employee has to make the good faith written offer to rehire the employee, which is rejected. Then it gives you an and. It says the employee during the cover period or alternative period is either fired for cause. Keep that in mind. Voluntary resign or voluntary request and receives a reduction of their hours. Now, this form was written for all 50 states and our territories in the United States. Texas, like about 18 other states or so, thereabout, we're at an at-will employment state. I'm sorry, it's not 18, it's fewer than that. So that means you can be fired or at will. You don't have to have cause. So keep that in mind. And so with that being said, the Texas Workforce Commission, and the next slide, has an excellent information and a great customer service number to call, because they have reasons that will protect you as the business owner and the employee. Because if an employee says, look, I don't want to come back to work, they gave an example because, I'm just really afraid. There are people in my family who've gotten COVID-19. That can be an exception where they can continue to get unemployment. And that is the big problem for many restaurant owners, that their folks are making more money on unemployment than they are coming back because of the tip situation. And it's true in other industries. So there are many reasons that will protect the individual employee and also the business person. And they're very aware of the rules of the PPP loan and the interim final rules and so forth. We had a great workshop with one of their folks. And so, and they do a great job. So keep that in mind. Very important. And so if you're listening, that customer service number is the 800 number, 800-558-8321. That's for the Texas Workforce Commission customer service number. Now, on the next slide, I just wanted you to know that we still have all the good information for the PPP form on SBA.gov on COVID-19. I just have a picture of the website there, so you can go to it and you can tool through and get information on economic injury disaster loan, the PPP loan, and all of our other products. Because keep in mind, we're still open for business with our regular loan program. And during this COVID-19 period, there are things going on. People are getting loans, and the first 6 months of those loan payments are deferred under, if they ask for it, under the CARES Act. So there are things still going on with businesses, as the chamber knows too. So the last thing I'm going through is some websites for you that the chamber will make available on the next slide, from SBA to other benefits. And there's one in Spanish. There's also our website to stay tuned to go to. You can follow us on Twitter. We will be doing more workshops. And if you go to the next slide, it's on there. And then we have our disaster customer service number, because people still have questions about disaster loans, which unfortunately have been reduced to a maximum of $150,000. Disaster works totally differently from most of us, from SBA. They're kind of their own little different entity, but we're all one agency. So more is coming on that. Things will be changing, but the whole push now is to get farmers and ranchers and ag producers to be able to have access to the economic injury disaster loan. That was a change that was made, clarity. So that's really all that I have on my side. So I'll turn this back over to the moderator.
Thanks, Calvin. We appreciate that very much. And I'm sure that going through this process, you guys will remain behind to help as much as possible. So we really appreciate that. So Eduardo Sosa, if you would help us now, we would appreciate it.
Thank you. Before I get started on an extensive discussion of the PPP forgiveness, let me qualify my comments simply by telling you that obviously the information I'm giving you is based on what we know at the moment. And as Calvin's already pointed out, the rules are changing. So what I'm telling you today probably might actually change tomorrow. We'll see. I'm going to start off also by giving you a few hints on how to make your life a little bit easier on the forgiveness process. And the first one I'm going to give you is based on just the name of the legislation. That is the Paycheck Protection Program. The number one intent for Congress was for you to keep paying your employees whether or not they were working. Because as you might imagine, it's important to keep people's food on their table, keep them continuing making their payments, doing all of that wonderful stuff to help our economy. So the first thing I'm going to tell you that if you have laid off anybody, hire them back. If you've cut their salary, get them back to where they were. That will make your forgiveness process that much simpler. And that's the second one. If the second hint is that if you have cut their salaries, get them back up to that to where they were before. If you've cut staff, get them back to where you were before, because you do have safe harbors. And as long as you get all those people back up to those standards, you're going to get your forgiveness will not be reduced, which is important. The third hint I have for you this morning is to start on the worksheet. If you look at the actual application, the worksheet feeds into the Schedule A, which then feeds into the calculation page. So start on that worksheet, and it'll just lead you through the process of getting to the actual calculation of your number for forgiveness. The fourth recommendation I have for you is, if you're using a payroll service, have that payroll service calculate that table 1 and table 2 in that worksheet. Because honestly, they'll be able to hit a button and get you all those numbers. Because you do have to list out the individual employees, so you might as well use that service. You're paying them anyway, so use them for that. The sole props, the number 5 category here, or the number 5 hint, the sole prop really has the easiest road under the forgiveness application. It's only got about 4 lines to worry about on the calculation page, and then they'll be finished. So that will be the easiest one for the sole proprietorship. I'm sorry, I'm using my shorthand terminology, and I should remember not to do that. The independent contractor also have a very easy go on the application. And I'll give you another hint, and that is to test the alternatives, because throughout the application, there's a couple of different alternatives that you're given. One of the first one is the 8-week period and all the alternative covered period. Test both of them, because bear in mind that you're being asked that your forgiveness will be based on paid or incurred, or paid and incurred expenses. So if you go in there, and you look at both alternatives and calculate out what would be your best situation, you may come up with a little bit better situation. And let me give you an example of what I'm talking about. Because based on that paid and incurred criteria, if you use a standard 8-week period starting on the first disbursement date, you may be able to include 10 weeks of payroll as opposed to 8. Example I use that if you're on a biweekly payroll period, you start on the day of disbursement. Let's say that you paid payroll the following day. You got your money on the 14th, but you actually paid people on the 15th. You can count on the all that payroll for the 15th. It goes through April. I think it's April 14th is the day that June 14th is the day that it terminates. And again, I haven't counted the 56 days. You guys do that if you want to. But you incurred for a week, and then you don't pay until the following week. You can still count that last week, even though you haven't paid it out, but you've incurred the expense. And as long as you pay it in the next payroll period, you can include it in your forgiveness number. So calculate those 2 alternatives, calculate any other alternatives that you're given in the presentation, so that you can use the one that has the most advantage to you. And do keep in mind that if you do that 10-week, it make that 75% of the loan forgiveness amount that much easier to attain. And then the last suggestion that I have for you, hint that I have for you, is to follow Kelvin's recommendation. I've been doing SBA loans since 1996, and if I haven't learned any lessons doing that since 1996, is that I need to document. Whatever decision I'm making, whatever action I'm taking, I need to document it rather than depend on my poor brain, because I won't remember what I did a week from now as opposed to what I did a week ago. So document. So if you've had to let somebody go for whatever reason, document why you had to let them go. If you made that offer to hire them and they said no, then document that you extended that offer and that they said no. If they asked for a reduction in their hours and you granted it, document that you did that. So whatever situation that you're doing, because remember, you can use that to help your forgiveness process and document that that situation. So document, document, document.
Thanks so much to Eduardo and to Calvin as well. I wanted to let you know that we did get some questions that were submitted in advance, and we're going to try to cover as much as we can within our time covered in the presentations, or that you're not hearing covered in some of the questions that I'm going to be reading from. If you'll please submit those in the chat function of Zoom, we'll try to get to as many of those as possible. The questions that we cannot get to, we will record the chat function questions, and we will submit those to our friends at SBA to see if maybe they can address those for us later on. I'm going to start, and Eduardo or Calvin, we also have Paul Danovic from Lubbock National Bank who works with Eduardo, Jennifer Oldham, and Matthew Jock from SBA on as well. And so I want them to feel free to respond to any of the questions as well. If you did cover some of this material already, I apologize in advance. I might have missed that as we were dealing with some of our technical issues. But let's go over these right quick. First, we have our contributions to a health reimbursement account eligible as a qualified payroll expense for PPP forgiveness.
The definition of payroll expenses includes benefits all the way back from the enabling legislation. And as long as it's the HSA account, the health reimbursement account, the employer portion is included as part of the benefits, it should fit.
Great. Anyone else? Okay. So the next question is, the new forgiveness worksheet says owner employees compensation. So if someone is an owner but is listed as an employee, is capped at 8 weeks of their 2019 pay. Is that any 8 weeks that they can choose? And does this apply even if someone is a W-2 employee? This question says, my 8 weeks ends June 16th. How can I have until June 30th to be back to pre-COVID levels?
A multiple part question, okay? First one, let's enter, well, the first thing you need to understand is that the 8 week limitation is for the sole proprietor or independent contractor that does not pay himself on a W-2 or any other way. That's the only time that you have that limitation. The only other time that you have that limitation is if a W-2 employee earns in excess of $100,000. The cash compensation is limited to that $100,000 limit, and that's how you get the $15,384 limitation. The sole prop and independent contractor has to go back to how he established his loan amount, which was a Schedule C, the 2019 Schedule C, line 31. Divided by 12 multiplied by 2.5 is how they came up with their loan amount. So you would take that same line 31 divided by 52, which is the number of weeks in the year, multiply that times 8. That comes up with the amount of the loan, also capped at the $100,000 compensation. So that's why it comes out to $15,384 being the maximum cap. I think that's the answer to the first part of the question. How can they have until 6:30 to bring people on for the safe harbor? Don't apply for forgiveness until after 6:30. That way you can document that you brought the FTE numbers back up or the salary and average wages back up.
Okay.
Yeah, I have to concur with what you said, Eduardo. Bottom line is that you're looking at a full 12 months of your salary, like you said, divided by 12, divided to get your average monthly salary divided by 12, like you said. So really, everything you said was good. I don't need to reiterate it, so I don't have anything really to add.
Okay.
Let me add to that real quick. And Eduardo and Calvin, For those that have not filed their 2019 tax returns, this same rule would apply to 2018 Schedule C information, correct?
Right. Right.
If that's what they used to apply for the loan.
Jennifer shaking her head. Jennifer.
She's going to come out and tell you that it's limited to 2019 Schedule C. If they haven't filed it, they still have to generate the Schedule C, and it'd be the same as they actually filed to our friends at IRS.
Thank you.
Okay, next question. This question is about the count of employees. The PPP application asks for an average of 2019 employees. The forgiveness application asks for employees at the time of the loan acceptance. If you have a part-time employee at the time of acceptance, do you count that employee?
I'm not sure I understood. Can you reiterate?
It's about the count, the employee count. The PPP application asks for an average of 2019 employees in terms of employee count. The forgiveness application asks for employees at the time of loan acceptance. The question reads, if you have a part-time employee at the time of acceptance, do you count that employee?
There is guidance on that in the form, and so this is going to be a tough one. It's a very hard one because when we first started out, it talked about FTEs, and then the rule changed where you can include in your count of employees part-timers and even work study students. But I think on the form, this is where it's really confusing. When you start doing your count of employees, it gives you 0.5 or half of a person count, if you will, for part-timers. So that part is probably going to have to be clarified a little more. Does anybody have, I don't know if you guys looked at the form as closely, but it is very confusing. I would certainly, yes, the answer, use that part-time person, but under the calculation, you use, I think it's in Schedule A, that person is counted as a half FTE, that part-timer.
Sort of a related question submitted next, and that was, what if an employee quits? What if an employee misses work unexcused or new hires? What about an employee that was injured off hours and consequently has not and cannot work and do not even know if they will come back? So we did have several employee count questions submitted.
Well, the one thing I'll tell you is don't get mired on individual employees. Yeah, look at the form itself. Table does require that you put the individual employees' names on there, but where the judgment is being made is on the full-time equivalents, the FTEs, and that's really what's going to be the most critical. So if somebody leaves and you don't replace them, yes, you need to document that they left and you didn't replace them and that it was voluntary, whatever the situation happened to be. But keep in mind that it's FTE based, and that's what that those reductions are going to be based on. So as long as you keep the FTE numbers on there, whatever happens to the individual employees, it's a different issue. It doesn't have anything to do with a reduction of your forgiveness amount.
And if you go back to one of my slides, it did point out that if someone does quit, obviously you need to make an offer, a written offer for them to come back to work. If they deny, if they said no, then you need to document that. Certainly this tougher if somebody is injured. Now that's a whole different ballgame. Certainly you can make an offer, but it may be a futile offer, but I would say at least document it in writing that you'd like for them to come back, you want them to come back. And it also will probably be relevant to them with respect to their unemployment compensation. So again, make sure that you make an offer. I would recommend that everyone make an offer for them to come back, irrespective of how they left, and then document the file that you did that.
We had another question that had an interesting item in it, and there are some dollar figures in it. I'm going to assume that you all understand the context of those, and if they were typed in and there's a typo or something, I apologize. But the question was submitted. There were employees who received severance during the covered period which exceeds the $15,385 figure because of tenure, rate of pay, and accrued vacation, but their annual comp was less than $100,000. Shouldn't those amounts count?
I can't answer the shouldn't those amount count. What I can answer is that the amount of compensation for the employee on an annualized basis, if it totals up to be 100,000 or more, it's limited to 100,000.
I agree with you, Eduardo.
Okay. We had another question submitted about employees hired subsequent to the covered period, but prior to June 30. I think you all covered that earlier. And then for wage reduction calculations, excluding a lot of questions about new hires in the covered period. So just if you have anything to add on new hires in the covered period.
Again, I think people are getting confused with individual employees. One is, remember that the rules state that the payroll is paid and incurred. So regardless of whether it's a new hire or a rehire or whatever, it's what you've paid. And then again, going back to the forgiveness side on the reduction, it's based on the FTEs. So you want to count as many people as possible in that FTE calculation.
Okay. I'm going to go over to the chat portion and scroll through it. On these questions, we did have one question directed to Eduardo, again about the 8-week limit, assuming that the rule in regards to the 8-week limit will change to the $15,385 rule per individual who makes over $100,000 if they had 5 payrolls and not 4 payrolls due to when the loan was funded, especially if they use the paid verbiage April 10th of 2020 through June 5th of 2020.
If you happen to have 5 payroll periods in that 8-week time frame, count it, because it remember, it's paid and incurred. So if you've paid it during that 8-week period, you count it toward that payroll. Okay.
On lease payments on real or personal property is used in the definition. Does this include rent or leases on equipment that the business utilizes?
That equipment is considered personal property.
Now, here's one thing that's come up, and we had a clarification. If equipment is related to their job, and that could be anything, it can be included. That did come up in a clarification that we got. So typically, though, to be safe, I think you want to stick with mortgage and rent payments on actual, your location, if you will.
And that is a good one thing that we do need to clarify, especially on the independent contractors and sole proprietorships. On other issues, I've gotten some questions as to whether or not a residential lease counts on that sole proprietor or independent contractor. And please remember that you're talking about business-related mortgages and not personal residence. If you have a separate warehouse for your business than your home, yes, that separate warehouse you could count. But if you're using a home office, you cannot use the quote-unquote residential lease.
So I'm not 100% in agreement on that. That's come up because we have had offices and homes, and many times on your tax returns, you do have office and home deductions. And we have actually had some questions that have come up on that, where on the front end, that office and home, a portion of that, just like when you reported on your tax return, has been allowed, has been said to have been allowed. Now on the back end, hopefully that'll be consistent. But I'd have to say that may not be on point.
Well, we'll ask them to issue an FAQ on that, because we're getting lots of questions on that.
Will do.
We have a question submitted about owner/employee. If an owner included themselves in the employee count on the application with proper documentation, do they include themselves in the count and calculation for reporting? It seems the forgiveness package is not making it that clear.
Could you repeat the question, please?
If an owner included themselves in the employee count on the application, do they include themselves in the count and calculation for reporting? The package is not making it that clear.
Yeah, absolutely. If they included themselves up front, they certainly want to include themselves on the back end on the PPP forgiveness application, without a doubt.
Will you look at payroll costs or get into the hours that employees worked? This question reads, I've given some employees raises. Will this offset the hours that they did not come into work because they were afraid?
Yeah, so that's come up. People are trying to get the full forgiveness, so they're maybe giving overtime or raises. There is a calculation where you can't certainly reduce their pay by a certain amount, and there's a limitation on how much you're going to be able to give over. But at the same time, that's typically for people who are over $100,000. Otherwise, if you're giving reasonable raises, reasonable overtime and things like that, that's come up a lot. That's okay, because we know that people may have to work overtime given the situation. So I don't know if that totally addresses the question, but overtime, raises, you can't just go crazy and then you're going to raise somebody's salary so much more than they usually get. That's problematic. I think even the form has some limitations there. So I don't want people to think they can't give overtime and raises. You can do that.
Thank you. We have a question submitted about lease payments. It says, if it is a triple net lease, do the PPP terms cover insurance and taxes on the property that is included in the triple net, or just the rent portion?
I'll bat that to somebody else. I don't know.
Actually, Kelvin, I remember reading that someplace. I'm not going to be able to quote it, but essentially it said if that's considered part of the rent, you're making that on a monthly basis, the base rent plus the CAM, then that is included in the lease payment. And of course, you're limited to that 25% of the loan amount.
Great.
Paul, did you have something on that?
No, that's what I was saying.
Okay, thank you. Next question is related to the payback. During the 6-month deferral, does interest accrue on the loan during that time period? If the term is 24 months with a 6-month deferral, what is the actual number of payments that will be made? 24 full payments after the 6 months, or 18 payments with a balloon at the end of the term?
18 payments. There will be no balloons. They will pay it all off by the end of the 18th payment.
Next question. The IRS gave us extra time to complete our 2019 taxes. The PPP loan requires the 2019 taxes. How long does the PPP loan application remain active so I can complete those and get the PPP loan funded?
The only one that it's applicable to is to sole proprietorships and independent contractors, and only Schedule C is required. So my suggestion would be complete the Schedule C in cooperation with your accountant, and be sure that it's going to be the same as when you file it.
Okay. And then had another question again, just to confirm. We have part-time employees that we have kept. Can we count their payroll as payroll cost even though they're not FTEs?
Well, they're half FTE, so yes, you count them.
Yep.
One other question. We received funds on the day we issued payroll, which was for the previous 2 weeks. Do we start with that payroll or wait till the next 2-week payroll?
that leads back to the my discussion, or my one of my hints is that you to look at all the alternatives. If you're going to select the 8 weeks started on date of disbursement, in a situation like you just expressed, they would count it because it's paid on that date. If they chose an alternative, the alternative treatment, they may not count it because it wouldn't be paid during that alternative treatment. So look at both situations. It could be beneficial if you did one way and not the other. So explore both.
Okay. And I'm going to, one question, and I actually have had this texted to me as well. Can you go a little bit further into the non-payroll costs that are allowable? I know that you talked a little bit about that earlier, but there's some questions that we've received about vehicle costs on the forgiveness application. What exactly does that include from a vehicle cost standpoint?
There's only 3 areas that are allowed. One is rent, one is interest on loans, and what's the, and I've drawn a blank on the third one.
Well, the mortgage, rent, and then of course the benefits, the payroll benefits, life insurance, health insurance, things like that.
Well, yeah, but that's payroll. They're talking about non.
Is it utilities?
Utility payments.
Utilities.
That's where
Thank you.
transportation is listed.
Yeah, yeah. Those are the 3 things that are allowed. Don't know where that would fit in.
So question in regards to that, some of the questions that I've received have centered around what all counts in utilities, and that could be a dramatic difference depending on the type of business. Can you guys speak to that a little bit?
It's telephone cost, electricity, water, that type. What others have you been hearing?
Fuel costs for a company that has a lot of trucks, is that considered utilities or no? Or large fuel bills to run a plant?
that did come up, and I think we need to. I want to send some information up to headquarters to get clarification on that, because the lease on a vehicle, be it a truck or a car, was considered a part of the necessary cost at one time, utilities. But I want to get clarification before we just go out on that. So, Paul, I think I want to take that as a note, office and home, and also the utilities on, say, vehicles, to make sure that we're on point here. But things are changing. I did get the strong impression with one of the customers we had that those costs could be included, but then I'd like to get an interim rule on that. So I'll make a note.
Thank you.
And there were some other questions submitted about allowable costs, for instance, insurance other than health insurance, such as general liability insurance, cell phone, fuel, etc. And so if you all could, I don't know if you have clarification on things like cell phone, fuel, general liability insurance right now, or Calvin, if that's something that needs to be clarified as well.
I don't know, Jennifer, you're on the line right now. I think that, as we mentioned, and Eduardo mentioned, cell phones were included in that. But anything you'd like to add, Jennifer?
Yes, cell phones, internet. I have been told that fuel is included as part of the transportation cost. A lot of people are asking, can we prepay? I would point out the wording that says cost incurred or paid. I don't think the intent there is for you to prepay. I think the intent is to get you through that 8-week covered period. So I would caution you against the prepaying outside of the 8-week period.
Okay. And then had a question on what is the filing deadline for the forgiveness application?
We wish there were one, but there is not one.
Okay. And then had a question submitted. Is it true that insurance benefits for the owner are not allowable?
You're saying like health or insurance that's paid?
I assume that's for health health type benefit.
Yeah. Well, if it's part of the payroll, surely it should be covered if we're talking about that type of insurance.
Well, Calvin, unfortunately for sole props and independent contractors who have employees, the rules are very specific that says those benefits for an owner are to be excluded.
Okay. Well, thank you.
Unfortunately.
Jen, you got that same, Jennifer, same information too?
Yeah, I think that's correct. And I think especially for the sole props, it has to do with how those expenses flow through the Schedule C.
Well, and it makes sense because remember, if you're looking at the net income for the sole proprietorship and independent contractor, he's already getting the benefit of that expense in the detail of calculating that net income.
Okay. Had another question about vehicle allowances for employees. Is that considered as part of the compensation, allowable compensation for an employee?
They need to count payroll exactly as they counted it when they applied for the loan. Okay, so if in their calculation for the loan amount they use those, then they need to include them. If they didn't use them, then they need to be consistent.
Okay. And then just to confirm, there were some questions that scrolled past me already about dental coverage, other life insurance coverage, and then had one that was just submitted again about health insurance reimbursements to employees. Are those, just to confirm, forgivable, part of the forgivable payroll costs?
If they're part of the payroll definition, which is benefits, then they'll be included in the forgivable cost.
And I think you went over this earlier, but are essential employee bonuses allowed to be included in your normal payroll cost?
Oh,
yeah.
Yeah.
I think as long as they're not over $100,000.
Yeah, thank you. It's up to that $100,000 limitation.
Okay. I have a question here. I'm going to be, it's kind of a long question, so I'm just going to read it as it was typed. Confirm for purposes of wage reduction calculation that we do not include employees newly hired during the 8-week covered period. I don't understand saying that you cover employees hired by June 30th by filing for forgiveness after June 30th, when the form is pretty clear that we count FTEs during the covered or alternative covered period.
Okay, go ahead and reread that one again. I just want to be sure I understand.
Confirm for purposes of wage reduction calculation, we do not include employees newly hired during the 8-week covered period. I also don't understand, I guess, Eduardo, when you were saying you cover employees hired by June 30th by filing for forgiveness after June 30th, when the form is pretty clear that we count FTEs during the covered or alternative covered period.
Okay, all right. So again, two different questions.
Mm-hmm.
If you have new employees during the covered period, you definitely want to include them in the payroll. What I'm talking about on the FTEs is if you replace, let's say you did have a workforce reduction, but you brought everybody back by June 30th. If you can show on June 30th that you had the same FTE numbers that you did on February 15th, I think it's the date, then you reach the safe harbor and you will not get a reduction. That's why I'm saying that you wait until after the June 30th date to actually apply, because that's when you can show the evidence that the FTEs are there.
Okay. And just we have time for one more question. And that was, again, just to confirm, back to the question on general liability insurance, can it be included or not?
General liability will not be covered insurance. Now, will not be part of the payroll coverage. Now, if they're paying for life insurance for individuals as part of their benefits, yes, that would be covered as part of the benefits, but not general liability insurance for the firm or for whatever.
Okay, great. Thank you all so much for seeing us through all those questions. And I'm going to turn it over back to Eddie now.